going to do a little discussion about the three blind mice, also known as the three stooges. And I believe I'm going to lay out a case over the next week or so that essentially the Federal Reserve of the United States is currently fulfilling the function of the three stooges or three blind mice. These guys are doing some wacky crap, unbelievable, and I'm going to start laying it out how it affects all of us in the housing business, but also this is something that you guys just need to be aware of. The Federal Reserve is starting to become an activist reserve. Now, these guys in theory are supposed to not have a political preference, and they're not allowed to by charter. They're supposed to be independent of the government, although the government pays their salaries, and in theory they're not supposed to do the current government, whether either side of the aisle, red or blue, doesn't matter. They're not supposed to be doing their bidding, but they have become an activist, power hungry, in my opinion, megalomaniacs, and guys that are out of control. They don't even know what they're doing. They've shot their mouth off when they shouldn't. They have not spoken up when they should have, and a whole bunch of things are happening as a result. First of all, let's talk about yesterday's PPI, Producer Price Index report. Last week, we talked about the CPI, the Consumer Price Index, the bases upon which they make most of their decisions regarding inflation. And it actually looks like from the month of November to the month of December, we are literally in a deflationary period. Yesterday, the other shoe dropped. The PPI came out, and they were expecting a 6.8% increase. It actually came out a 50 basis points decrease from November to December. So when you extrapolate that to a year, that is 0.50 times 12, 6% decrease. They're expecting a 6.8% increase, it's 6% decrease. So not only are we in deflationary, we've stopped going up, we're going down dramatically. And that's a big drop. 6% a year deflation is a huge amount. Now, so basically what's happened overnight, the economy went into a free fall, and it happened sometime between Thanksgiving and Christmas. Those of us who are watching this stuff saw this coming, and we've been talking about this for months. But the Fed has they came late to the party. They did too much damage at the party. Everybody else left, and then they burned the house down with them in it. And that's essentially what we've got going on here. They continue to talk about raising rates when they need to drop rates immediately across the board, because the damage they've already caused is going to take a longer time to unwind than it took to make. So we've got a big problem there in that, they basically have forced downward pressure on employers to get rid of staff today. One of the large tech companies announced, I don't remember if it was Facebook or who it was, 10,000 more layoffs. This was on top of 20 that they had last quarter. They're trying to basically make everybody, in my opinion, a ward of the state. And the Fed is not only complicit, but in some cases they are taking the baton themselves and running that whole mile without handing it off to anybody else. One of the goofy things that they did this week already, believe it or not, even though this is Wednesday, on Monday or Friday last week, they said, and I don't know why you'd come out and deny something unless somebody's accused you of, but they came out and said, we're not interested, nor will we participate in anything we do involving climate change. We're not in that Green New Deal thing. We have no authority to deal with anything with regard to climate change, and it's nothing that we can affect, and it doesn't affect us. Then yesterday, I saw an article that came out from Yahoo Finance, and it says the Federal Reserve offered new details Tuesday on how it will test the resilience of banks under different climate scenarios. So day one, they say we have nothing to do with this. Day two, they've come out with rules for it. They are doing a pilot exercise to take the top 6 banks in the country, and they named them Bank of America, Citigroup, Goldman Sachs, JP Morgan Chase, Morgan Stanley, Wells Fargo, whatever that is, 6 or 7, 6 largest banks. And they are targeting them with, remember, words mean a lot with the Fed, so you got to read between the lines, but here's the exact press release. They are tasked with assessing the impact of hurricanes, from hurricanes to wildfires, heat waves, higher average temperature on residential commercial real estate loan portfolios over the next year. They are calling it a physical risk scenario. They're also asking banks to evaluate the impact of stresses from the transitioning to a lower carbon economy on corporate, commercial, and real estate loans. What that means in real terms and for real people is the Fed has just stuck their nose in the grindstone, and they are going to tell these banks, come up with a plan to regulate out people who are either using too much, whatever it is, fossil fuels, greenhouse gases, whatever the politically correct term is. I don't know, because I don't do that stuff, but they're basically trying to come up with some method to regulate individuals and businesses to force them into towing the line to what now the administration says we have to have. And you probably all saw the deal last week when the president came out, and this happened after California did it a couple of months ago. They want to ban gas stoves, and right behind it, when you read the fine print, it's any gas for use in the house. So that could be hot water heaters, forget a hot shower, a hot bath, gas stoves, any other places you might use gas. If you use a barbecue that's powered by propane, they don't want that. All that stuff has to go. And the Fed is now tasking these banks with evaluating how they reinforce or enforce their future rules on existing participants. Now, you and I and anybody who has a loan in the United States is an existing participant. So if all of a sudden the Fed says to Bank of America, any of your clients who have a gas stove, we are not going to back up your loan to them anymore. Bank of America has the right in their documents to call your home loan due because you have a gas stove. So it's absolutely out of control. And like I said, the last line of defense, I thought, although the last year, my opinion of the Federal Reserve has gone down dramatically, I thought these guys were the smartest guys in the room. Instead, they're the three stooges. And they are now in a position of enforcing these global initiatives to rid the planet of greenhouse gases or whatever. They couched it under, it creates indoor pollution, and you can't have, indoor pollution hurts people, causes asthma. But as CNN accidentally discovered the other day, when they interviewed one of the administration's people, they said the real agenda is this global initiative for reducing greenhouse gases. It's not to prevent your child from getting asthma. So this thing is a cluster F, big time. And the Fed is no longer impartial. I mean, it's like all of a sudden the Supreme Court said, you know what, we're going to just enforce what somebody says in some other country here. Forget the Constitution. We're no longer going to follow it. We're not going to follow our rules. We don't care. And it started, like I said, with the Fed last year when they said, it doesn't matter what you guys think, we're going to continue to increase interest rates during 2023, regardless of what happens to the economy, because you stockbrokers they were talking to in December when they said this, you guys are too positive about the outcome of the economy. Everybody has been too positive the last 60 days. Everybody feels it out there that things are getting ready to get better. Instead, the Fed is insisting that we go down. You're going to see a rate increase from them, in spite of the fact that we're no longer in inflation, but we're in deflation. And these guys are out of control. Political pressure is the only way to stop these guys. I would definitely write to your congressmen, your senators, anybody that will listen and say, stop these shenanigans. This is ridiculous. You want to cut off my home loans or call my loan due because I have a propane stove or I have propane fireplace in my house, or I cook on gas because I like it better than electric. And now the government's decided that you no longer deserve a home loan. So the Federal Reserve, who holds all the ability and the only ability to print money, they also have the ability to pull money back in. They decide that you should not have a gas stove any longer or anything because, it could cause your toddler to develop asthma. That's what they're saying. But the real reason is, like they said on TV the other day, these guys are crazy. Watch what they do. There's a lot of pressure on them right now. You can add more pressure by reaching out to your senator, congressman, any political representative that you've got, and hammering these guys to get with reality. If the economy is going down, the last thing we need is increase in interest rates. We need a decrease in interest rates. We need them right now. So far, everybody is in the financial industries, in business, and a lot of in the housing industry. We're all getting together, and we are collectively putting pressure on these guys. Even though they're supposed to be immune from political pressure, they aren't. At the end of the day, they got to put their pants on one leg at a time, just like we do. And, the more we hammer them and say, stop bending to political demands, and do what's right for the country, do what's in your charter, which is to regulate inflation, stop being a political activist, the better off we'll have in this industry for home loans. In the meantime, because we are overly, exuberantly positive about 2023 and the economy and what it's going to do for our housing businesses, interest rates continue to drop a little at a time. We'll see what happens come the 1st of February when their next rate increase comes out. But they will have to drop rates sooner, in spite of what they're saying. Their hand will literally be forced, and they will instantly put our economy into stagflationary mode if they don't do that. So I'm projecting we're going to see some interest rate decreases, maybe by midsummer. It needs to happen today, but they need time to cool off and to basically admit that everybody was right and they were wrong, which is exactly what happened here. So keep your eyes and ears open. We'll keep you guys attuned. I'll talk to you some more about some of the other things the Fed's up to and some of the shenanigans they're pulling that are off charter, in my opinion, and at our next News You Can Use. So, all right, that's it for today.